Good morning, everybody. Welcome to Ankerstar Wealth, a morning show. Okay, it's morning here in Texas still anyway, but we are getting there. We're both back home. As you can see, we're in our normal surroundings. We have three things to talk about with you today. The first of which is the Slab party is today. Yeah, I know a lot of you aren't local, but if you are local, come on out to the Doghouse Drinkery. It's a dog bar, so you can bring your dog if your dog has the social skills to be able to play with others. Then feel free to bring your canine out, but also just come out. It's a come and go. Well, we're gonna have food and drink, so just come out and say hi to everybody. We'll have a couple of commercial real estate experts there, Buchanan Capital and Stallion Capital, if you're familiar with those names locally here, that are going to be in attendance as well. No presentations, we're just hanging out. And of course, across the street, you can see the Slab and some of the parking stuff starting to take form over there. So pretty excited about that. But before we get to that party, let's talk about the topics of the day. First of all, I'm going to talk about Amazon. We haven't talked about Amazon. I really can't remember when the last time we brought up Amazon, but their CEO released his annual letter. There's a lot of good stuff in there. He owns some failures, and he talks about how they're focusing on the future and AI. Of course, you can't say anything without saying AI. And the stock is hitting new 52-week highs today. So we'll take a look at that chart. Then I will transition to Mike, who's going to talk about inflation. So if you were sitting back yesterday going, why is the market selling off? I thought we were done forever with the market selling off a percent or more. Like, this is crazy. The world is ending again. We survived the apocalypse. Now we have the market selling off due to an inflation report. Well, we got another one today, and you know what? We get some of this. Who knows what's going on? Mike's going to decode that for us and explain it in USA Today type 8th grade reading level terms for you. And then finally, we do have our winner of our Ankerstar Wealth Stock Madness. I want to say congrats, but I can't because Mike's going to release that at the end. But we do have a winner, and we'll talk about how that concluded. Before we get started, this is a financial education presentation. You have to do your own due diligence before acting upon anything here in this presentation. More information is available at ankerstarwealth.com. The opinions expressed in this presentation are Mike and mine alone. All right, let's share out to, we're back on Teams, as you can see. Let's share out the Amazon stuff I want to show you. So here's the article that's on, excuse me, CNBC. That came out this morning. It'll be hanging there all day. Just search Amazon if it's not one of the leading ones. So here's committed to cost cutting and investing in AI, right? So those are two big things you want to hear as a shareholder. You want to hear that, keeping costs under control. They did a big layoff, I don't know what, a year ago, maybe. It seems like it was closer, but it probably was about a year. But, keeping costs under control so you don't get into that corporate bloat that tends to happen over time. The chaos theory, everything just gets more expensive. But he's got the axe out. He's cutting costs where he can, and he's investing in AI. Okay, well, I don't know this. Well, let's see some specifics, right? So he got into, I'm not going to go to the actual articles there if you want to go all to the bottom. But so here, this last, I'll try to highlight this, see if this is possible. This is what I'm talking about. In February, they launched a tool called Rufus that uses AI to help users search and shop for products. I have not said, hey, Rufus, yet. I have not discovered said tool. I am not on Amazon a whole bunch, but again, that's something I will take a look at. We'll see there. Also, they rolled out Q. Okay, cool name. For with the James Bond fans out there, for a chat bot to assist with daily tasks. Who doesn't need assistance with those? And Red Rock, generative AI for AWS customers. I don't know if these are going to be amazing or hits or misses, but I do know they're trying, and that's the important part. Because when you look at the stock, this is a 1-year chart of Amazon. Scroll up, just put that bad boy right in the middle. That's the kind of chart you want to see all day, every day, right? From 102 to 188. Some blips along the way, but really none of significance, if you will. So is it expensive? Well, it's approaching $2 trillion in market cap. That puts it obviously in the top 7. I don't know exactly where. I'd say it's probably 4th or 5th. Mike may know. But when you really look at a traditional, valuation of a PE, it's sitting at a 65 P. Can it command that? Yeah, it can probably command a lot higher actually. So I don't think Amazon is done. You know, if you think regular PE ratios, if you make like toothpaste and cheese, you know, 17 to 18, overall the market right around to 22. But if you're one of the leading companies out there, you can command all the way up to or north of 100, right? So a lot more to expect out of Amazon, and they're doing all the right things out there. All right, so over to you, to Mike, to talk about what's going on in the world of inflation.
Yes, yes. And hey, the last time we talked about Amazon was when we were looking at our first purchases on Amazon many,
Oh
many,
yeah,
many years
yeah.
ago. Yeah. And I was thinking as you were explaining Amazon and AI, Amazon Inc. AI. Yeah, I don't know.
Okay, okay.
Maybe they should go like Facebook and rename themselves. You know, that might help too. So and also on fourth grade reading level of the USA Today used to be fourth grade reading level, but readings got worse, so now it is actually up to an eighth grade level, right?
Nice.
Let's hope not. Okay, let me share my screen and I will show you the beatdown that we had yesterday. So consumer price index went up a little bit higher than expectations. It was supposed to go up, I believe, 3.2 and went up 3.5. Market had a major sell-off yesterday because of that. You know, and really was it because of that? Not really. It was because of that. There's a less likely chance the Fed will reduce rates earlier. That's why the market sold off. It's not so much the consumer price index there, but so, and then today they come out with another report, the PPI inflation report, and I'll bring that up. And it rose less than expected. It was supposed to go up 0.3%, only went up 0.2. So the market's it's been more flat today. It's been kind of up and down. But so basically, like Steve said, there's conflicting inflation reports. Which to me is kind of means we're getting close, but still a little bit higher than we want. Fed still has work to be done, and you know, this will continue every time there's a negative report. I would expect the market to have possible sell-offs and back and forth as we go. But for those of you who are like, inflation, how does this affect me? A lot of inflation is because of housing. And if you are in the same house and you haven't sold your house and you have a locked in interest rate, you're kind of like, hey, my house is worth more, but you know, it doesn't necessarily cost me anymore because I'm locked in. So what I thought I would do is share, let me find this, and share the components of inflation. So the graph on the left shows all the components of inflation, so with housing. And obviously the darker blue line is the big chunk, and that's housing. Green is energy. Energy is actually a little bit less expensive. And you'll see kind of a little bit of a red line, a red part that's growing. On the right side takes housing out of play. So let's see what's really causing inflation. And that big red growing line from May 22 to now is auto insurance, and that does affect you. So while your housing can be locked in, I wish we could lock in our auto insurance because the rates are going up. And for those of us with teen drivers, they're really going up. In fact, you know, I have a friend who's a business owner, has a fleet of vehicles, and his auto insurance went up, you know, 20%, which 20% is a lot. But when you take it across over hundreds of thousands of dollars, 20% is a real lot. So auto insurance is accounting for like 60% of that increase. So now why I had some discussions with some car people. Why would that be? Well, the price of cars has went up due to inflation. Therefore, the price of fixing those cars when they get wrecked or breakdowns, things like that, has went up. And then, you know, I haven't proven it, but I believe there's a lot more distracted driving nowadays. We have a lot more texting. We have a lot more things like that, which, you know, I don't have a chart to show that, but accidents could have went up as far as the percentage. So those things may be affecting you. So don't text and drive. You know, tell your teens to take Uber and Lyft and pay it themselves and save yourself the auto insurance.
Right.
No, I don't know if they'll agree to that. Okay, on to the March Madness excitement. Let me bring up our final chart. So the winner was
all right.
Russ
Yes.
with Johnson and Johnson. Now, anytime someone wins like Connecticut, we got to look at how they did it. Did Johnson and Johnson just blow away over the last 2 weeks and go up 10, 15%? Let's look at how they did it. And now remember, the market has been very choppy the last 2 weeks. That worked very well for Johnson and Johnson. So in the first round, they were up just a tiny bit, 0.15%. They knocked off AstraZeneca. The next round, they were down 0.03, and they barely beat Chase Morgan, down 0.04. That was my team, knocked out. The next one, look at this, round 3, J&J down 1.14%, but Adobe was down 1.99, so they advanced. The next round, Johnson & Johnson down 0.07, but Alibaba, Steve's pick, down 0.40. Johnson & Johnson advances. The next round, Johnson & Johnson down again, 0.52, knocks off Meta, down 1.53. And then in the finals, they were up 0.25, and they knocked off Berkshire Hathaway. So Johnson & Johnson, over those 2 weeks, I don't know, at a glance, maybe break even, but it just shows you that in this kind of a choppy trading, to have a stock that was not down much, it beat all the ones that were down a lot. So Russ is the first annual champion of our competition.
All right. Well, that's awesome. And, congrats to Russ. I did want to say, maybe do I have a picture of Russ that's somewhat current? And, in fact, I do. So there's your champion. This is Russ over here. If you can see the arrow on the left side of the screen, on my right there, just right of Irene, and that's his amazing wife Kelly right next to him. So that is our winner from the competition. That was the picture we had Monday at the NASDAQ, by the way. But so what did we learn from all of this AW stock madness? It's madness. There's probably no real lessons to be learned there, but I hope you enjoyed it, because we're doing it again next year. So we've got our first winner. We'll get Russ. We'll get something out to you to commemorate your win. And of course, you're the first name now on the Ankerstar Wealth Stock Madness Wall of Champions. But to transition to the real world, you guys may have seen that article about Dave Portnoy from Barstool Sports. He bet 600,000 on UConn at the beginning, UConn men's, to win it all, and he did. So he cleared 2.1 million. But to peel that back, that in itself isn't all that interesting. We're not big sports gamblers, whatever. But when you look at UConn's wins, they covered the spread every single match. You just broke down the path, right? Well, the path, which included a drubbing of Alabama along the way, they beat the spread, which was 10 points in every game they played, and so did they last year. So they're literally like 12 games in a row now in the tournament. He was saying it was a pretty easy pick because they whipped everybody last year so hard. So I don't know. It's March Madness for a reason. Anybody can win, but good on UConn for being able to take it down. So all right, that's all I've got for today's show. Fun stuff. We'll see you later today. Hopefully, if you're local, at the Doghouse Drinkery, and you can see the Slab at our Slab party. With that, we'll catch you guys up tomorrow. Bye.